FE Credit is the fastest and the largest growing consumer finance company in ASEAN. Under the leadership of Kalidas Ghosh, FE Credit today has grown and served more than 12 million plus people across the countries. And as we talk about, it has $1 billion of annual revenue. Mr. Kalidas Ghosh has 25 plus years of industry experience and have worked with multiple banks as well as financial institutions globally. In July 2019, Kalidas Ghosh has been honored with the CEO of the Year award by Asia Pacific Customer Service Consortium. It is a pleasure to have you, Mr. Kalidas Ghosh, on our panel today and look forward for an interesting discussion with you.
Yeah, thanks. Welcome to all of you and glad to be here. Just a small correction. I'm the Vice Chairman and CEO of FE Credit and not an office holder of VP Bank, even though VP Bank is the parent of FE Credit.
Yeah. I will move on to the next panelist, Mr. Samir Soleiman. So Mr. Samir Soleiman is the CEO of Arab Financial Solutions. AFS is the leading fintech service provider in the Middle East region. Prior to joining AFS, Mr. Samir Soleiman was the MD for Network International and was managing the business of Network International in Middle East. Throughout his career, Mr. Samir Soleiman has held various leadership positions in Network International, like he was a chairman of Network International Jordan. He was a MD of Network International Egypt. He's also on the board of Discover Card in Middle East, as well as the Union Pay International. Mr. Samir Soleiman is a fintech enthusiast and is on the board of multiple fintech service providers. So currently he's on a board of Jingle Pay, which is a payment service provider or so-called the neobank in UAE. He's also on the board of Zibuni. It's an e-commerce startup, along with Swara Digital Finance. Recently, Mr. Samir Soleiman has also featured in Arab Power List 2021, along with visionaries in Middle East. It is a pleasure to have you here, Mr. Samir Soleiman. Looking forward for an interesting discussion with you.
Pleasure is mine. Thank you very much for inviting me, and I hope you enjoyed the discussion.
I'll move on to the next panelist, Mr. Anish Achuthan. Anish is a tech visionary and is a serial entrepreneur. He has 17 plus years of industry experience, and in his past stint, he has co-founded multiple companies. Anish's first startup was in 2001, iFutures. In 2007, Anish started CashNext, which was a financial inclusion platform, which was later acquired by a company in Latin America. In 2013, Anish co-founded ZSwitch, which was in 2015 acquired by Citrus Pay. In 2017, Anish co-founded a neobank or Open, which focuses on the SME segment. Open is Asia's first neobanking platform that automate various business processes around banking and the payments for the SMEs and the startup. Welcome, Anish, and look forward for having an interesting discussion with you today.
Thanks.
Thanks a lot, Anish. Now I will move on to Mr. Ravish Bhatnagar, so a banker. He is from IndusInd Bank. So Ravish has 12 plus years of industry experience, and currently he is the head of digital banking with IndusInd Bank. Prior to joining IndusInd Bank, Ravish was working with McKinsey & Company for 7.5 years, where he has helped multiple banks, especially the top 3 banks in India, to set up the lending business. Ravish is a fintech enthusiast and is currently working on the digital banking strategy for IndusInd Bank. Welcome, Ravish, on the panel.
Hi, thanks for having me here. A pleasure to be a part of this panel.
Fantastic. So setting up a context. Today, as I spoke about, we are trying to get it, we are going to discuss about digital banks. And I think today we are at an interesting crossroads where at one end of the spectrum, we are seeing a lot of tech companies starting a neobank or so-called a neobanking platform. And on the other side, we have the banks who are going through the interesting wave of digital transformation and are trying to think like a tech company. Digital banking as a banks have exploded in the recent past and is continued to grow at a 46% of an annual year-on-year growth. The latest report of Accenture indicates that there have been 70 plus digital banks that have opened last year, and there are across the globe, and there are central banks across Southeast Asia, Middle East, and India, which are inviting applications for the digital bank and also at the same point of time, bringing in regulations like the open APIs so that neobanking platforms can connect and offer a superior customer experience. As part of our today's session, we would like to talk about the digital bank. What are the challenges that we are seeing on the digital banking side, as well as the road ahead? So starting with Anish, because you have co-founded a digital bank in India, which is a hotbed of technology startup. We would really like to understand your experience in terms of setting up and scaling a bank from for one bank at the back end, which was ICICI Bank, to around 18 banks and having 1 million customers. Obviously, SME as a segment is exploding. There is a lot of interest from the existing banks as well as from the tech startups like the Pays of the world, the Jupiters of the world, to get into the segment. So just wanted to understand how has been your journey and how do you see this entire digital banking platform in India evolving?
Vivek, I'll start with a disclaimer. As rightly mentioned, we are not a bank. We work with a banking partner, so we can't call ourselves as a bank by regulation. Primarily, like, we started open in 2017, and the reason, the idea behind was that while in our previous businesses, I used to deal with a lot of small businesses and SMEs, and one thing which we realized was that business banking is broken for them. They struggle a lot in terms of tracking cash flows, dealing with multiple interfaces, and that's when the thought came up, like, if all your cash flows, money moves through your current account, and if you know that, okay, where the money is coming from and where it is going out, I can automate income, expense, and accounting while doing the banking transactions. So can we build can we turn the current account into a financial OS to help a business automate their finance? For that, can we build a digital bank? Now, the regulations are, like, very tough, as we all know, in India, where there was a payment bank license, and there was also a few of the small finance bank licenses and few universal banking licenses which we got. But even for a startup like us, like, even it's nearly impossible to even think about, like, having a banking license. So that's when we looked at some of the international models, especially in Europe and the US, wherein, like, the fintech startups ride on the license of an existing banking partner. And we thought, like, that's a great model to replicate, because in India, even before, banks used to partner for UPI or prepaid, and that model existed. So that's how we got started. And today, like, we power around 1 million SMEs in the market. We process $24 billion in annualized transactions. And one difference what we found in our experience was that, unlike Europe and US, where a small change, incremental change in customer experience would give you more customers, in India the banks are really advanced. Like, I'm happy with a HDFC or a Kotak mobile bank application. Why should somebody migrate their banking? But when it comes to business banking, we realized that, okay, this pay points of receivables and payables do exist. So we took that as an approach to get the customer and put banking as in the back, basically. That's the learning which we had. So far, like, that's been our journey, like, around 1 million customers. And we ended up partnering with multiple banks because, again, we realized, and like, outside markets, you don't have a single bank which could actually help you to build an entire infrastructure for a bank. For example, there could be banks which could give you an API to launch a current account, but then to issue a prepaid card or a credit card or a debit card, maybe that particular bank may not have the capability, or they don't have a model for BIN sponsorship. So we end up partnering with another different bank. So that's how we ended up partnering with different banks. But the end customer experience, customer doesn't probably always realize that there are multiple banks powering your business banking service.
Oh, thanks a lot, Anish. So I think, let me move to Kalidas Ghosh. So Kali, on one side, we have seen Anish, who has set up or who have ride onto the existing rails of a bank to provide a new banking platform, given the regulations that we have it in India. You have been instrumental in setting up the UBank, which is the digital bank for the VP Bank. How has been your experience in setting up that bank and scaling that? And also, we would also like to talk about the Uno Bank that you have set it up in Philippines.
Well, with regard to UBank, it evolved from a very, as you know, FE Credit evolved from a traditional finance company to becoming a credit card or a credit line sort of a business, which moved one step ahead of a pure installment loan consumer finance kind of proposition to a more wholesome credit line or managing the credit relationship with the customer as we built history of this. And then we realized that we have opportunity for larger services to be provided to the same customer. So that's when we looked at introducing banking for these customers. Many of our customers actually had a bank account before, because in Vietnam, payment of salaries is mandated through bank accounts. And even now, because of the expansion of digital payments, many of these even business holders do have bank accounts, but they are completely underutilized. Typically, the cash is taken out of them, and there are literally no effective useful transactions other than cash withdrawal, and then, in order to fuel the cash dependent economy. So we thought that we will introduce a digital bank which would be useful for our customers, because they'd be customized for their requirements, as opposed to Main Street banks, which were targeting or catering to the top echelons of the community, of the population, because of profitability reasons. Obviously, if you have branches, if you have staff, you have cumbersome processes and the costs associated with them, the transactions have to be profitable enough to support those type of costs. So they were not to be done with the kind of customers that we service. So we felt that if we have a light-footed, nimble, easy to operate, entirely in the palm of somebody's hand through a mobile phone, if that kind of a relationship can be built through a banking business, we should be able to service our customers. That was the principal philosophy behind UBank, and it's working out quite well. Of course, our view is a little different from what we just heard from Anish around open, because from our perspective, we still pay paramount importance to managing the balance sheet, because that's what is in our books. And therefore, all the paraphernalia of managing a balance sheet has to be catered to by us. So yes, technology is very important, because that's what runs the business, acquires customers, manages them, retains them, upgrades them, etc. But at the same time, the back end has to be, and especially the balance sheet has to be managed as well. Uno in Philippines is a little different in the sense that it is being built from scratch, but with similar experience. It is also a credit-led digital banking proposition. So in a way, maybe 5 years hence, Uno and UBank would have very similar look and feel, very similar complexion. But the development history is a little different for each one of them.
Understood. I think thanks a lot, Kali. So coming to Samir, so we have on one side, we have seen Anish, who has launched a bank, or I would say open, using the existing APIs, the so-called open APIs from the existing banks, and offering various type of SME services. On the other side, we have Kali, who has actually done the entire bottom-up full stack bank to offer the services of banking services to the banks in Vietnam, and hopefully expanding it on Philippines side. So you being on a board of Zingle, you being running a successful wallet program in Bahrain, how do you see the digital banking evolving in Middle East?
I think there is a big move accelerated by the COVID pandemic towards digital experience, and this is across multiple industries. However, I think where the timing of when an investment is done is quite critical. So early on, AFS decided to invest on a digital wallet, a mobile wallet, in partnership with a local MNO in this market. And basically what we did is that the objective of this proposition was to address the segments that are seeking lifestyle, improved lifestyle, and actually tackling untapped segments like blue collars in the market. So what we did is that we created two differentiated products. One is to address an added value to the existing customer base of the community and give them a differentiating value. For example, benefits and rewards versus a traditional credit card. And the second one was actually to tackle an untapped segment. We have done a great success story during the implementation, during the launch, where we have reached to more than 100,000 cards across this market, and we expanded even our geography from 1 market to 3 markets today, and we're looking at further markets. The key challenge that I really look at from a business perspective is that this business is very dynamic, and traditional banking is very, very slow compared to the technology of today. So if you compare where, and this is my personal assessment, where the technology of the banking industry, I think it's here, and where is the global technology, it went up there. To bridge this gap, digital banks are going to play a critical role, but the digital bank is only one component of it that requires a significant investment in infrastructure that drives this. also, as part of the group, we've got an organization, for example, and this is something that I really I'm impressed with, and I have to mention it. There is a local bank that's owned by the group, which is called Ila Bank, and we support Ila Bank in their debit cards and in their proposition. However, they have developed a slick onboarding capability that I was amazed when I've been through the onboarding process, a full process within less than a minute. I am on board, and I actually topped up my account while I was in bed. I was testing it. I like fintech, so I like to see how things operate, and the onboarding experience is unbeatable, and it's compliant with every single requirement of a very strong regulator in this market. So it requires a lot of investment, it requires a lot of passion, and it requires you to be up to speed with what's happening in the industry and the customer needs, to make sure that you develop your technology as you go. And this is why Agile is quite important. This is why it is very important as an organization to understand your customer needs and make sure that every experience you give him is one step less. It might not have an impact in India short term, but I think, Anish, I think long term it will have a significant impact. And as you develop your product going forward, this will be a key differentiator. And once competitors lands, more value proposition comes out to customers. And again, it helps a lot in the digital transformation of cash. Remember, cash is still significant in the region where we operate in, across Middle East and Africa. And that is a very, very important component to convert cash to digital as well. So a lot of happening on that domain here, and I'm looking at even expanding this further to providing digital transformation of banks as a service to the client. So a lot of happening on that domain. But happy to hear more and learn more from the panelists here.
Thanks, Samir. I think you brought a very important point, and now coming to Ravish, I think Samir talked about a very important point in terms of the technology which a traditional bank is using vis-a-vis what a digital bank is using, and he used a very important example, which is perhaps one of the first touch point when I try to get into the banking relationship is in terms of an onboarding. So, how, as a banker, how do you see you embracing this challenge or this opportunity in terms of competing with so many digital banks or the fintech startups coming in? What has been your thoughts being a banker over here?
Sure. So see, I'll actually talk about maybe my experience, not just at the current bank, but also the number of banks that I've served, and also a couple of banks that I was a part of before joining McKinsey. See, every organization needs to chart its own path, right? That's my firm view. And I think as a bank, there is space for both, right? Banks will need to ensure that they are right up there competing with the fintechs, because at the end of the day, I have to compete with the 40 plus app in a consumer's, mobile handset, right? So if I'm not as good as the remaining fintechs out there, I will become irrelevant in the long run, right? So that's how banks will need to do it. But that doesn't mean that, that creating a digital bank is the only way out. I think there is scope for even partnership. And I'll give you an example, right? So a bank can actually create a digital play or a digital attacker play, compete with the fintechs out there in the Indian market or Asian market, as well as there you will see a lot of digital attacker play in the West here, Europe and US. So what banks can typically do is because they have a lot of trust from the customers, and then large banks especially have, so they can try and create a digital attacker play similar to the N26, the Monzos, the Revoluts of the world, be right up there by focusing both on the front end innovation and the back end innovation. At least to Samir's point, Indian market, at least I will believe, and I know that it's slightly different, where we do a lot of front end innovation, right? And openness, for example, one of the good stories that have come out, right? So in Indian fintech and banking industry, the innovations have kept on happening on the front end side, right? I think it's a back end where we need to match up with maybe the fintechs exactly, right, and have the right back end. So digital attacker play for a bank is actually critical, and it will obviously require a lot of commitment from the bank across, having the right value proposition, finalizing the right segment, choosing the right set of products, features, channels, partnerships, brand, technology, data analytics. There are just like tons of levers, right, that the bank has to think of. But once you have chosen the right segment, once you have chosen the right set of value story for and the right set of feature stack, right, that you want to deliver to the customer, you can try and see that is there a neobank out in the market which is maybe offering a different sort of a value proposition, which is, let's say, complementary to yours, which is maybe targeting a different segment, and over there you can provide the entire set of your APIs, your core APIs, and power the new banking journeys as well. So it's not a either or. I think it's both. You need to find your right your play first. I think that's important, and in parallel try and identify the right neo banks which can complement at least your digital attacker play. I think that's somewhere what I have at least I have seen in my experience, and this is what I can tell you from my personal vantage point.
Thanks a lot, Ravish. I think you made very important point in terms of looking at a two-pronged strategy. Obviously, first from the front-end perspective as well as from a back-end perspective. And Kali, this brings me to you. I know that FE Credit is one of the most talked about case study in Southeast Asia in terms of how you have gone about a digital transformation and reducing the onboarding, taking the specific case of an onboarding for a customer from a traditional lending platform, which used to take 4 to 5 days, to now it takes less than 10 to 15 minutes. So how did you go about that entire transformation? I'm sure as Ravish was talking about it, the transformation starts from the back end and then goes to the front end. So how did you go about doing this entire transformation, especially when we look at the FE Credit as a business line?
Yeah, our experience was actually a little different. So we had been starting to look at and keep a watch on the industry trends and also on consumer behavior in Vietnam. Vietnam, as you know, is one of the markets where digital adoption is of a very high nature. The level of internet, mobile penetration, it has 160 million connections for a country with 100 million people. So, the joke is that people in Vietnam are born with mobile phones, right? So otherwise the number couldn't have been that high, and also the number of times or hours they spend on mobile phone and other devices. It became very apparent that it has to feature our whole interface with the customer, which was very intermediary driven, direct sales agents, telesales agents, dealers. That has to go completely different in future. And when we started this journey, we realized that we have to do it in 3 baskets. And that is a strategy which, in fact, we worked with one of the large global consultants that Ravish mentioned, is somebody and people who really helped us to formulate that strategy, where we looked at 3 different baskets. So the first one was the way we interacted with the customer. So we started looking at how to deliver the loan within, let's say, 10 minutes to a new customer. Somebody whose record we do not have with us already, or even new to credit customer, by obtaining information in a very easy, convenient way from the customer right up front, and then onboard him without making any compromise to the underwriting standards. Just like Samir was talking about compliance standards, we had our underwriting standards to live up to, because if we are to compromise over there, the credit quality of the portfolio will suffer irreparably. So we had to make sure that those aspects are maintained. But while we were doing that, while we were changing the front-end customer interface, going through mobile phones, websites, even chat mode now through through this chat medium by interfacing with a bot and then transferring to an agent only when required, we realized that unless the back-end changes, we will not be able to do. So there we made an important decision. We used to have these verticalized systems for lead management, loan origination, customer service, collection. We threw all of that out and we bought a BPM solution, and we configured the entire customer journey on a horizontal system so that it can interface through APIs with the front-end system and realize the goal of a unified customer journey. So now today, if we have to change in that journey, let's say we have to introduce an e-commerce led journey for a customer, the time taken and the flexibility is much higher because we have changed the backend as well. And the final, and then we started implementing robotic automation in some processes. We started taking services like face recognition, conversational AI, and it became easy for us because now there was one customer journey and we could avail these services through API at any point of time along that journey. Not only change the journey, but also design that journey at will. So that was the second basket, which was basically the backend processes, RPA, single platform customer journey, single platform customer journey, and things like that. And then the third basket was around data. So we realized that now we have significantly more data. Earlier, we just had an application form from the direct sales agent, but now we have, his entire data that is residing on his device that he has created on platform like, social media or e-commerce portals. So now we were able to access that data, and that in turn reinforced our onboarding process, both on sales and marketing side, propensity and timing and contextual marketing and things like that, but also on the credit side, because now we had enhanced data for doing the underwriting. So if you look at it, we had all these three work streams strung together in a manner that they came together all together to create this perfect storm of sorts, where we could change the customer interface that made us more accessible to our customers, presented our products and services in a more convenient, flexible manner, and helped him to access those services and products. We changed the backend, and we changed the way we look at customer data. Instead of just asking for the data we require, we actually started acquiring all the data that we could, and then started making some meaning out of it. So I think that was that's how it was, reasonably well coordinated by a very strong team of management professionals we had also acquired. We brought in new talent. I mean, at the end of it, we couldn't have done unless our people, our team, and some of them were specifically recruited for this purpose. Our partners, like our global, the strategy consultants, and our IT partners, that helped us to deliver this.
Understood. I think that's important in terms of looking at this entire digital transformation from all the three buckets, Kali, as you just spoke about. So, Samir, if I have to talk about the Ella Bank that your parent company, ABC, or the holding company launched, so would like to understand from your perspective, when ABC launched Ella Bank, and perhaps one of the most successful digital banks in Bahrain, what was their thought process? Were they again looking at bringing in all together the new systems and creating the bank complete bottom up, or the way Kali described, they looked at the various customer journeys, looked at the existing tech, and then tried to essentially digitize the various journeys, and wherever required, bring in the new tech like the BPM that Kali spoke about?
Absolutely. So I think what is imminent at this point of time, that digital is reality. It's not a luxury that you have to have, right? So if you are a bank and you're not investing in digital transformation, so you're going to miss on something for sure. Because customers will tend to move towards digital and convenience going forward. I think as an early adopter of innovation, ABC has been always an early adopter of innovation. They invested early on a digital retail banking. They don't have any digital branches. It's all digital retail banking capability. So it's part of the strategy of digitizing the bank, and they started with the retail component of it. Actually, the leadership of the bank then took over the strategy and took it into execution. And the beauty of that organization, in my point of view, is that they keep on releasing functionalities and capabilities as they go. They gamified the experience. It is quite interesting to see. Despite Bahrain is a market, it's actually a place where you proof test all your capabilities. Regulators are very toned on. Technology is pretty invested in. Resources are really capable and well hungry to understand and learn more and develop more. And it's a raw market. So if you think about Ella Bank and their market share in 2 years, I think they have achieved whatever traditional bank couldn't achieve in 10 years. And with the roadmap that I'm not even close to, I think it's bound to be much larger as an organization. But any bank that have got the capability today and is not thinking about digitizing it, starting with the retail, and I think Anish, to your point, SME is another area that needs to be serviced. I think that's why most of the banks will get into that now. The bigger, I think, the bigger deal going forward is the open banking or open finance, right? Because remember, you create a customer experience.
Right.
You have a UX for your user experience out of this out of a digital bank, and then you enrich it with data and capabilities like Khalidus was mentioning. You're reaching out to social media to get more information. What about sharing actually the data that's available with all the other banks and building credit decisioning and growing your business from that? I think open banking APIs or open finance, because now they added the insurance component to it, it is gonna drive even further growth to the digital banking and empower the digital banks with much more capabilities as we go. And I want to leave it here.
Thanks, Amir. So, Anish, coming to you, I think essentially, obviously looking at India as a country, over there, it's all about open APIs. And open is also using the APIs from the multiple banks. Today, as we speak about, you have 18 banks at your backend through which you can offer the current accounts to the existing SMEs. So what do you think? Obviously, the backend in this case is pretty much the APIs are pretty much the same, which any other, I would say, any other platform can get it. So what do you think would differentiate one open from the other competitors? And what do you think the winner would be doing differently over a period of time to get more and more SMEs hooked onto the platform?
Got it. So Vivek, I'll talk at least from our experience, both from a bank's perspective and as well as Open's perspective. So not all the backend APIs are the same. Like some of the legacy core banking systems, when they expose, they may not have the capabilities in some cases to expose this to the fintechs, or many times like it's not intuitive enough or flexible enough to support your business models. So there are banks which have actually taken this as a serious initiative, where they had actually separately set up a business unit. They started working on the APIs. Basically, they probably have actually started building a middleware on top of that things, and they started putting up the good APIs. And then there are the banks which are still the old-fashioned way as well. Now, if you look at in the international markets where the new banks which doesn't have a license, when they partner, they always go with the smaller banks. Basically, if you look at the US, it will be always an Evolve Trust. It's because probably you also get the flexibility to put your infrastructure on the bank. Basically, whether you had seen this in case of acquiring, where you take an acquiring bin, or in terms of issuance, you take an issuing bin, but you build the infrastructure on that thing. Now, in India also, we had tried that model. So in some of the services, we consume the existing APIs from the banks, and that's where like the quality actually of this APIs varies. The success rates varies basically from bank to bank, and infrastructure to infrastructure. For example, even most commonly used service for UPI, where not only Open, maybe like a payment provider, basically they always shift between 2-3 different banks because of the difference, right? So what we believe is that the one fintech which would be able to create a moat would be to work closely with the bank. Most probably would be like a smaller banks, because India's got a lot of small finance banks as well as more nimble banks, where they're able to control that experience. Can they actually build that middleware? Of course, within the regulations, basically. And it's also, this nimbleness is not about technology as well, right? Because it's also more about like the departments and the bureaucracy as well. Also is very much important when you have to do that. So without taking too much time, like when last year, when I was talking to one of the banks in Southeast in Asia, they were saying that we set up a separate subsidiary for digital banking. We put everyone into a co-working space. We give them t-shirts basically to make and separate brand. But when it comes to the legal, the same old guy in the bank is what they have to actually go back. So there's a lot of pushbacks on that side as well. So, since we're talking about the backend, along with the backend, there are a lot more functionalities as well. And I do believe the fintech which will win or create a moat is the one which can actually build a little more infrastructure on top of the backend, basically. Or cases like cards and all, put your own boxes or put your own infrastructure, just only go for the bin sponsorship and you control the experience part of it.
And thanks a lot. Maybe before Ravish, I come to you because I have another point that I wanted to check. But Kali, specifically when you launched UBank, what are the things that you did, like Anish was talking about, in terms of putting the team separately, giving them a separate T-shirts to feel as if they are a separate entity? So how did this things worked out for you, especially when you set up a UBank over there?
Well, we took the same approach with almost the same end in terms of having to go back to the bank, because obviously we are operating under the aegis of the license of the bank. It is basically powered till the time we presume digital banking framework becomes more defined in Vietnam. We, however, tried to sort of immunize against the usual bureaucracy of maybe a legacy bank by making sure that the approval process is streamlined. So, for example, it goes directly to the highest committee, which approves usually instead of going through the entire individual steps of reaching that point. In other words, have direct access to the highest decision-making body, and we were all present in those bodies to make sure that decisions are taken in the interest of the digital bank in a manner which is compliant. So we tried to find a happy medium. Obviously, we needed to take the bank and its governance structures okay for everything that we do, because ultimately what we do can or will affect the bank's license as well, the regulatory relationship of the bank. So yes, we tried as best as we can at the operating and business model, keep it separate from the legacy bank. But we obviously right now have that umbilical cord with the main bank, and we have to respect in terms of compliance and regulations.
Understood. So Ravish, coming back to you, I think at the start you talk about the important aspect of collaborating with the fintechs, and Anish also spoke about the fact that today the APIs, or mostly when you talk about collaborating with the fintechs, it's all about getting and giving an access to the fintechs or these new platforms to your APIs so that they can pick up the customer data, open the do various banking services. So as a banker or as a IndusInd Bank, how do you see you are doing this digital transformation? Because obviously the success and the transactions that would drive, obviously these neo banking platforms over a period of time are also driving a lot of transaction. Anish was talking about having 1 million plus SMEs in past 2.5 odd years. So there is a bulk of transaction that would be coming from these neo banking platforms, and obviously the banks which would have a best APIs at the back end, which are able to provide all the services, would be the where the transactions would get routed to. So as a bank, how do you see you doing this digital transformation where you can start supporting more and more fintechs onto your platform, while at the same point of time trying to launch your own digital banking as an offering?
Yeah. So Vivek, maybe let me talk about, I think, three main areas, right? Which as a bank, as well as and again, right, leveraging the majority of the experience that I've had is actually consulting a lot of other banks. I think it's been a year here, but there are three major areas, right? And this is true for both helping or at least powering the neobanks in what you are saying, as well as having your own strategy, right? Because unless and until you have, so it's not about, so one, there are these standard APIs that will be there, right? So you'll be able to, let's say, provide an account statement on email. You'll be able to do a bunch of things around if you require, let's say, on WhatsApp, a PDF statement download, etc. Right? So there are these bunch of APIs that will be required. But unless and until you actually innovate on the APIs and try and deliver, something differentiated to your own customer, that API will never become a new API, right? Unless your partner, let's say the neobank, says, okay, we want to provide a service in a very different manner, right? We want to have an interactive sort of a statement. So now you need to go back and actually then reconfigure your APIs to a different context, right? So at least in my view, you will require to power your own digital bank's journey, and the same, at least the same, whatever infrastructure and APIs you set up, you'll be able to leverage that better for your partners, right? So the banks will need to think of both of these things in the same manner, but there are three areas which they will need to think about it in a very different manner, right? And the first one is relevant for the digital bank, the own bank that you want to set up, and the remaining two are common for both the new and the digital bank. So basically, so basically the three areas are essentially, what is the value story, right? Now, value story is something that you will need to understand what is the value story you want to provide, what is the kind of organization you want to set up, right? You want to have a HR inside, you want to have a legal inside to, Anish's point, you need to think of a lot of those things, and you need to think of basically the entire brand identity that you want to create, right? But these three elements, right, which is basically the first part, which is what is your brand identity, what is the organization, what is your existence, right? This will be relevant for a digital bank that you create on your own. Because the neobank which comes in and partners with you, they would have thought through this answer, right? And they wouldn't want to, they might want some suggestions, etc., if they are not clear on something. But typically, what I've seen is that these neobanks, at least the neobanks, are pretty clear on their value story, their identity, right? The value proposition that they are bringing, right? So for digital bank, this becomes important, right? Now, coming to the two elements which are common, right? Which is the functional stack. So the entire functional stack, the feature stack, the product story, right? Now that is where the what you differentiate for your own brand, you'll be able to replicate it for the new banking setup, right? If you have at the back end configured, let's say, APIs which help you categorize spends, right? And I think Open is right here, and Anish would have done a lot of it. Say they're looking at the balance sheet, trying to understand the accounting statements and categorized it, right? So unless you have categorized it in your own bank, you have done it, you will never understand the nitty-gritties that are involved over there, right? So that will always help if you have done some sort of an innovation inside the bank, which can then actually power the new banking story, right? So that's the second major element. The first is obviously the identity. The second is the functional and the product story. And the third is basically the technology, right? The technology story, which can be divided into, in my opinion, basically 5 parts, right? What is your cloud and the infra story, which can power both your digital and the neobank story? What is your data and data and the personalization strategy, right? Because at the end of the day, people can replicate the product story, right? People can also try and, let's say, poach in or acquire an organization, right? And people can replicate channels, right? But what will be very difficult to replicate is the personalization story, right? Because you would have built your data, the entire data structures accordingly, right? The number 3 within the technology, but is the API-led connectivity, right? That again will power your internal digital assets and will power the neobanking assets, right? So you can't think of it differently, right? And number 4 is basically your experience APIs, right? You want to give what kind of experience you want to provide, right? So if you, for example, you are providing a UI UX, but along with that, there are so many differential experience APIs that you can build, right? Can you build an orchestrator API where you deliver one journey, but using the orchestrator, you can deliver like 6, 7, 8 different forms of that journey, right? And the final element is actually the core technology, right? Which is how will your core tech scale as per the needs of the organization? I think these are all in all 3 elements and 10 main points within these 3 areas, which are important, which will power your a bank's and an organization's own digital banking story, as well as it will power the neo banking partners that will come to an organization.
Perfect. Thanks a lot, Ravi. So we've spoken about the evolution of a digital bank. We spoke about the transformations that the conventional banks are doing to go and compete with the so-called neobanks or the neobanking platform. Now, would like to really understand how is this entire business or the business model changing with the onboard of a COVID, and now we are out of the woods in many of these countries. So how is this business? Is it going to change this pandemic? Is it going to change the business model, the way the banks are working today, or the product services mix? And also would like to understand slightly more on the profitability, Anish, because today, whenever we speak about, like yesterday, there was a news article which talks about with the latest funding, the new bank valuation has reached to $30 billion. So, and still we know that the banks are losing money on each and every customer acquisition. So would like to understand from you, Anish, starting from you, in terms of how this pandemic is impacting, if at all, in terms of the business model and the product service mix that the banks are offering. And what about the profitability? Is it pushing the profitability further down, or how is it impacting?
Right. So, Vik, post the pandemic, I mean, not post the pandemic, I mean, when post-COVID happened last year, what we have seen is like on the initial 3 months, we have got impacted a bit, especially a lot of our businesses, I mean, they got shut down, or like some of the industries got impacted. But what we've seen is whether there was actually a huge transformation, the digital transformation from the businesses, whether it are like freelancers or SMEs. They realize now that, okay, now this is very important to digitalize my finances. And in Open, we always never positioned it as a digital bank fully, because you're always positioned as a financial automation suite. So, and this was something which was relevant because, for them to manage, automate their finances, automate their reconciliation part of it. So we actually seen an increase by around 20% on the number of accounts being opened on a monthly basis, and even a month on month we had been growing. Now, coming to you asked about the profitability part of like neobanks, right? And even Kaldas mentioned that, right? Also mentioned before that, it's very important that, okay, when you have a banking license, you can actually control the balance sheet, and that gives you more leverage basically. Whereas players like us, we don't really get that advantage fully. Like, for example, I can't do anything with the float which I bring to the banking partner. So in case of Open, we had always taken an approach of targeting a segment which already pays for certain financial automation services, whether they're using QuickBooks or Zoho basically for a subscription. So we have a subscription model. Even though the service is a freemium model, we have got a subscription model where we charge a monthly premium for expense management or subscriptions. Then we do have a revenue sharing component, whether it is like the cards, like the interchange revenue fee, or on the payment gateway we have like a revenue share on the few bips basically. Then the per transaction fees. So that's how the combination. And what we've seen is like in fact, the service was completely free till around last April, and during the pandemic is what we actually started the monetization. And what we've actually seen it went from almost 300 to 400x from zero basically in terms of the revenues. And it's been month on month, it's been going on a very healthy level as well. Now, it again depends on different business models basically. For example, on the consumer neo-banking side, obviously you can't charge the customers. You will have to work out on the models because mostly outside India, it's always been the interchange revenues and the float revenues. In India, there are like few challenges in terms of regulatory challenges in terms of working on a revenue share on the deposits that you bring in, or like even putting that deposits back to lending as well. Obviously, you can do co-lending models and the other models to lend to the customers as well. And going forward, even for players like us and even other neobanks, I think lending and wealth management is also going to be like one major areas because specifically for players like us, we have a lot more access to the payables, the receivables, the frequency in which they get paid, and combine that with traditional underwriting that gives you more opportunity to create more intuitive lending products. For example, a cash flow prediction model where I say that, hey, Vivek, you have from your cash flow prediction, you have 6 months of runway, but here's a credit line that is actually available on your card, kind of things. So that's a way in which we are seeing the industry evolving, at least from an India perspective.
Thanks a lot, Anish. That's useful. So coming to you, Khalid, so you have seen, you have UBank, then you have FE Credit. So how has the consumer behavior changed in the past 12 to, I would say in the past 12 months since the onset of a pandemic? And how do you see this evolving over a period of next, say, 12 to 24 months?
Yeah, I mean, from a consumer behavior, I guess both from a salaried professional segment as well as from a self-employed segment, it has had tremendous impact in a market like Vietnam. Of course, Vietnam has managed the COVID situation much better than most others, if not among the best in the world. But at the same time, it is not decoupled from the world economy, so it had its own impact on economic factors. So we see obviously changes in demand, consumerism taking a little bit of a backseat, conservatism coming into the forefront, insurance products being uptake being increasingly getting more and more, not only on the health front but even on life insurance front. And of course digital payments, more and more e-commerce purchases. Like right now there is a semi-lockdown, a social distancing period going on in Vietnam because of a recent spurt in cases, spike in COVID infections. And you can see the level of food delivery transactions or even e-commerce transactions for day-to-day daily needs, which is something which is very traditional in Vietnam. Vietnam is one of the fastest growing retail markets in the world, but 90% of the retail business is traditional trade, and it's actually growing faster than modern trade. So it's very atomized. It's all the neighborhood mom and pop stores, etc. But they are now shifting to e-commerce, online delivery and online ordering and things like that. So the opportunity for us to be embedded in the customer's journey has increased. I think it has accelerated nearly double compared to maybe life as usual before COVID. So yes, the transformation journey has not changed radically. It has not become completely different. It has, on the other hand, accelerated maybe 3-4 years of development into a period of 9 to 12 months by the customer behavior, which changed dramatically over COVID. And I think at the same time, our way of working, our way of interfacing with the customer, I mean, under normal circumstances, completing an application form for onboarding purely on a chat mode, on asking questions and filling up the same application form would have been very different and would have probably taken much longer. Regulators might have had a different view if it was before COVID. But I think COVID has changed the situation, and we see more and more acceptance of erstwhile unthinkable transactions on digital mode being now actually being migrated rapidly onto a digital platform. So I think consumer behavior, our own outlook, regulatory outlook is changing. There are some obviously imperatives of the social distancing and other situations. It has accelerated. I won't say that we have seen any radically new tech, other than some back office like work from home and all. Just before we were this call, we were talking about how our 5,000 plus telephone operators are 90% of them are moving on to a home operation, work from home, and how technology is having to keep pace with it, because we had a auto dialer which was distributing the calls, and now we have to do it in a decentralized way in people's home over VPN connections, and that's not easy. And thanks to our technology team, we have achieved large part of it, obviously not with the same degree of efficiency, but so something pretty close to it, like almost 75-80% of those levels of normal BAU levels. So life is clearly not the same after COVID.
Perfect. I think that's an interesting perspective. So maybe in terms of, I'm being mindful of the time that we have while we have many things to ask or discuss. So Samir, coming to you, how do you see this entire digital banking evolving, say by 2025? And what is the preparation do you think that as a fintech, as a bank, because ABC is a bank, that a bank should do to embrace that changes? Samir, you're speaking on mute.
I think if I can say I can predict what's going to happen in the coming 18 months, I'll be very smart, right? So I wouldn't go really that far. But if I can tell you right now, I think there is one traditional thing that I always heard from techies, right? From the technology, from any development team, from any technology team, they want to give you the minimum viable product, and they want you to sell a standardized product to all your customers, right? What's happening right now is basically revolutionary in the tech space. So to start with, personalization is gonna become the norm going forward. So each customer will have his own personalized experience, and the transformation and the evolution of the digital bank to address that personalized experience is going to play a critical role in the customer decision on utilizing a process. And then the second one, which is also important that I always think about, is there will be an evolution of hundreds of digital banks. Okay, the customer will have the lead in choosing that. So will there be an evolution for a digital bank aggregator? That's a question that comes to my mind. The second part is that which bank will be able to keep the customers engaged and use their experience throughout the life cycle of the customer. So there is that's why there will be always a coexistence of wallets and digital banks, because wallet can give you the full super app experience that we call it the super app experience, and they have the capacity to do that and the speed to do that, while the digital banks will have to comply with the regulations. It might be more complicated for them to get into that space. So wallets will become super apps. Digital banks will tend to get into personalization, and the personalization of the customer experience will drive a lot of the behavior, the evolution of aggregators for digital banks will start coming up, where a customer can actually, Anish, you have done something really at the beginning of this, where you have multiple banks, because you are aggregating services. You might want to aggregate some service from multiple banks and give the customer the ability to choose which bank will he go with. And I don't know how the rules and regulations will work and how banks will absorb that, but it's open space. The future is unlimited. I get really surprised when with the speed of movement of everything. And again, don't forget that we've got an Amazon and a Google out there that could become the largest digital bank tomorrow morning if they start, right? So there is a lot of moving parts. And to predict what's happening in the coming year, I think there will be much more digital banks coming up. Regulations will become tighter. There will be a reduction in the dependency on traditional retail banks, and there will be an expansion from retail into other segments. And finally, customer will continue to decide. Ride-hailing companies might want to become banks. Everyone might want to become a bank at the end of the day, because there is a yield equation here that the banks makes that nobody else makes, and everyone is fighting to expand into the other part. Like in the acceptance space, or in the acquiring space, you see online businesses starting going offline, or starting going to physical stores, and vice versa. Right here, it's actually the evolution of digital banks. There is no digital bank that's going physical. But I think we will start with many digital banks. There will be aggregation, then they will start moving again to physical. And this is how I think it will be. I'm not sure. No one can say what will happen tomorrow, right?
Thanks a lot, Samir. I think that was an interesting point in terms of the aggregator of the digital, so-called the neo-banking platform. So Anish, over to you. What's your quick thoughts about it before we open it for a Q&A?
Right. So first thing, like, completely agree with Samir and this embedded finance as a terminology, and everybody will now want it to become a bank. And for example, in Open, we have a separate business unit called Switch, where we are already powering one of the largest FMCG to create their own, one of the large e-commerce companies to create their own digital banks, basically on our APIs infrastructure. But what the future is going to be, we will see now more digital banks coming. It need not necessarily be from fintechs. It could be non-fintechs, and that also means it's a larger opportunity for the banks, the intermediaries who are actually providing this infrastructure as well. And that's what I feel like what's going to happen. And definitely we are in an exciting phase. Basically, we can't fully predict where it is going on, but a lot of excitement is happening for everyone, all of us in this space.
Perfect. Thanks a lot, Anish. So Ravish, before I open up for the Q&A, I could see quite a number of questions. From a IndusInd perspective, from the bank's perspective, what are the preparations that you've been doing to go and compete? So I think Samir talked about hyper-personalization, and today, as a consumer, we have seen our experience when we interact with any of these consumer internet companies like the FANGs of the world. So, and if I look at more and more the so-called the neobanks platforms, or these, they are trying to emulate something what some of these large consumer internet companies has done in terms of personalization. So how do you see the bank, especially in terms of IndusInd Bank, taking up that particular challenge and then evolving or improving the so-called the customer experience?
Yeah. So I think, see, that the pillars that we are using is to actually get to a certain place, right? And I've discussed the pillars, but I'll just maybe synthesize those, right? I think that out of all of them, to your point specifically, I think 3 of them are essentially extremely relevant. Is how do you ensure that there's a line that I read on social media and I find it very relevant. Let me just bring that up. So growth is actually true growth is true customer engagement and the loyalty that you develop. Acquisition actually, which people call it as growth, is actually child's play, right? So the idea is that if you're able to engage your customers that you have acquired, that is the true growth, right? At the end of the day. So that at least resonates with me. And at least as a bank, I think these are the three things that will help us to grow, right? And when I say grow, it's not just about acquisition, but about engagement and loyalty, right? Because that is what is going to differentiate us from the other banks in the future, right? And those pillars are going to be, to Samay's point, I completely bang on, right? Personalization. How do you set your, the entire data structures at the back end to offer that personalization to the customers? Number two is, experience layer. How do you provide those experiences to the customer in the matter which is relevant to them, right? They would want to see what matters to them rather than something that is completely, open for, everyone else. So providing the right kind of experiences to the customer through the customer journey. So differentiate, how well can you differentiate that? And number three is the middle, at least the middle and the back end, right? The API-led connectivity. So how can you try and deliver these experiences, because all these experience APIs, process APIs will be at the back end, right? So using the triad, right, this particular triad, we can actually achieve the true growth, which I see as like actual customer engagement, if you ask me.
Understood. Thanks a lot, Ravish, for this points. So maybe moving on to the questions, I think there are quite a number of questions that we have it from our audience. So maybe the first question is directly to you, Anish. Someone is trying to ask, how easy was it for doing a partnership with the different banks? Was it really easy, or it was a difficult task? And moreover, what were the concerns from a bank with regards to security and compliance? I think that's one of the points that we didn't touch upon it, but would like to hear it from you.
Right. So Vivek, the first bank which we have partnered with 4 years back when we started it is still on the UAT stage. We are not still gone live with that particular bank. But just to, it was a really tough this thing, because unlike a payment service provider or payment gateway where the APIs were standardized and available here, from a bank's perspective, there is a lot more risk when you're dealing with, fintech or so-called, a neo banking platform, because in terms of the security, that if something goes wrong with the customer funds, like the bank's reputation, the license, everything is in stake. While most of the times the business heads always gives the approval, it always gets stuck when it comes to the compliance and the legal. But one good thing which we have done, and this is advice which I also always give for fellow entrepreneurs, is that plan for those the information security, the ISO, in case of an India getting a certain audit, audit basically, the PCI DSS compliant if it is required. Take that as a priority, build that as a department right from the beginning. And also very important part is like, how do you manage the fraud, the risk mitigation as well? Because the more and more now the banks are also, if you have this in place, it's easier to actually reduce the go-to market, especially when you have to deal with the banking partner. For us, a lot of things were actually by through learning. It took a lot of time for us to actually get it right. But now after like the first 2 or 3 banks, now it becomes more easier because we have the process in place, we have the certifications in place, and things like that. Having said that, there are like, that's also the reason why the intermediaries now, there are like a lot of third-party providers who actually done this for you. So this could be help you go to market faster than actually going directly dealing with a bank, which probably takes around 11 to 12 months.
Fantastic. Thanks a lot, Anish. So quickly, I think there is a question from Vibha, and I really would like to reach out to Kali and Samir. There is a question which talks about, in comparison to a wallet, how does the bank perceive banking, mobile, real estate? So maybe she's trying to ask, how is wallet different from the digital banking? And I know in Vietnam, you have seen the surge of wallet at one point of time, and Samir, I know that you have been running the wallet as well as the digital bank. So maybe over to you, Kali, then I'll quickly go back to Samir for his thoughts, especially in terms of wallet versus digital banking.
Well, I think wallets are purely payment driven. And I think the augmented services in terms of having credit line attached to them, in terms of wealth management options, or in terms of a larger ecosystem play, has always been thought through, but there are restrictions which kind of limit the capability of a wallet against a full service digital bank. In fact, prepaid accounts from digital banks or even Main Street banks sometimes can be actually a bit more powerful, a bit more feature rich compared to wallets per se. And wallets in Vietnam, for example, a wallet which we have a strategic partnership with called SmartPay is focusing more on the same atomized retail that I talked about, and signing up micro merchants to facilitate the general population of customer to use it for their daily life in the points of sale that they go to. So the focus has shifted a little bit from customers, where they are doing B2B tie-ups, B2B2C type of tie-ups through anonymized scan-to-pay options, SDKs embedded in the bank's mobile banking, but enabling the bank's customers to make payments at the retail merchants that they are tying up, because the banks are not serving those retail merchants, and they're not targeting them as acceptance points either, and neither are the big associations or the scheme cards. So the wallet is payment focused, where the bank is able to encompass a larger area of services. So if you look at retail financial services, you have the transaction products, right? The debit cards and the CASA accounts. You have the savings products, the short-term saving product. You have the entire gamut of loans, secured, unsecured, term, overdraft. You have investment, and then you have protection, your insurance. A bank is able to complete the full service, all the baskets in which products can be categorized, whereas wallets are primarily in the transaction area. So banks definitely have a wider spectrum to cover compared to wallets.
Perfect. Thanks a lot, Kali. So over to you, Samir. You spoke about super apps. You spoke about you already. Your team is already running a successful, or maybe arguably the best wallet in the region. So how do you compare wallets to the digital banks?
I think Khalid has summarized it really well. I think wallets are to do with payments, but I would just like to add to it the untapped segments, or the segments that the banks are not really interested in. And this is where we went to the blue collars. I think where we'll go to other segments that banks really don't really look at. But it's a way to empower transactions and make sure that transactions take place and drive more transactions and help in accelerating cash conversion. Now, the reason you want to expand that wallet into a super app, because you want more engagement and more transactions, really. So any payments company and any fintech today is looking at the transactions. Transactions is all what we look at. So in my business, for example, wallet is quite important and strategic as well, because if you look at Arab financial services today, we serve banks and financial institutions where we provide them back office operations, technology, and we help them operate. They own their marketing and decide on their customers, and the rest of it, we do it for them. And then we've got a merchant community, which basically we are a direct acquirer in multiple markets. And then we have the fintech arm, where actually we're using that arm to be our product development arm. So we partner with fintechs that adds value to our two core businesses here. So a wallet cuts across to deliver services to both my merchants and to my financial institutions, and potentially incorporate the fintechs into that wallet becomes really more critical to businesses like ours. And then don't forget, all of us, all the digital, will have the power of data. Banks being banks or being wallets. Banks in specific have a wider range. I think where banks are going to evolve even further, I think they're going to go into different segments, because at this point of time, you see banks that are doing retail, very small number that are doing SMEs, but I think they will evolve even to a wider segments, and their product offering will be much more in terms of financial instruments.
Thanks a lot, Samir. I think so. We have quite a number of still questions coming in. Maybe what we will do it for our audience, maybe we'll reach out to you individually for those questions, and if you can find some time to respond to those, we will be happy to share it on our handle. So that's something that we would like to do, because there are quite a number of questions that have come up from the various audience over here. So I think we have already exceeded our time by 10 minutes, but just would like to summarize. I think it was really a great having you all on the panel today. I think it was a very, very interesting perspective brought in forward by Anish, Kalidas, Samir, and as well as from your side, Ravish, in terms of how the digital banks are shaping up, and how essentially what are the digital transformation, or so-called the technology best practices that some of these digital banks or the banks are following to go and compete with the same set of customers and trying to offer them the superior customer experience, or so-called, as Samir was saying, the hyper-personalized experience. So I think it was great having you all over here as part of our today's panel. We wanted to do more discussion, but unfortunately we have a limited time. So thanks once again for joining in, and stay tuned for our episode 3. Till that point of time, I would say stay safe and stay masked. And Kali, once again, apologize for the slightly miscommunication on the title. Maybe my team loaded incorrectly. So thanks once again for joining in.
No problem. Thank you. And thanks to my fellow panelists. It was a pleasure.
It was really a pleasure all over here. Thanks once again. Bye.
Thank you, everyone.
Bye.